Hello everyone and welcome to ICM's midday session. We're going to start with the euro dollar, which is a bit moving upward today and a corrective move. So yesterday we had a big move to the downside, trading at almost 1750, and now during the past couple of hours we're witnessing a pullback and a rally upside. So what are the levels that you need to watch out for? You can just draw the trend line combining the previous stops here that we found resistance near almost in the past couple of minutes. So we're almost trading at this area. It's a minor resistance area, with the next one could come in between the level of 1830 and 1845. So this area here is just the previous stops that were posted following the vaccine announcement. So they could be filled with some selling orders or selling pressure for the market. And the next level, if we were able to break above this area, we can just hint to further upside towards 119. In order to on the fundamental side, we're just waiting some comments from Christine Lagarde, the European Central Bank President, in the ECB forum. She would be speaking about the monetary policy, mainly any positivity regarding the vaccine, or how the central bank is looking to adapt to the latest headlines. This could have some impact on the market, as long as the European Central Bank is just looking forward to further ease the impact of the second wave of coronavirus on the European economy. So this can impact the euro dollar negatively. So these are the key levels on the upside on a bullish scenario, while on a bearish scenario, definitely a drop back below 1795, which was a previous support, could lead to further downside towards 1745. So these are the key levels on the intraday that we could be trading in the next session, or even tomorrow. If we just add the technical indicators, you can see that we were able to break above the Bollinger Band and the 100 and 200 hour exponential moving average again. So we traded back below. You can see how the 200 hour exponential moving average was a key area for traders. So here it found support, and then when the support was broken, it got a retest towards the 200 hour exponential moving average again, and then the lower side of the Bollinger Band, and now we're trading back above these levels. So maybe we're poised to some consolidation move between the levels that we highlighted, 119 and 117.40, unless we have new fundamental factors in play. The British pound against the US dollar was weakening since yesterday on headlines regarding the Brexit talks. Still a bit, we were getting contradicting headlines. Some of the officials there announcing on a certain progress, but still there is also bigger problems to solve between the European Union and the United Kingdom. On the other hand, we had economic indicators earlier today, the GDP, the third quarter GDP figures, and the monthly GDP, and also industrial and manufacturing production. Most of them, they were they were a bit soft, more than expected. So they didn't come in as strong as anticipated. So this just affected a little the market. So we're still trading almost sideways here in a range between 31.60 and almost 32. We can just highlight a bigger area for the next range to be traded, which is today's low and yesterday's high, almost near 32.25. So these are the key levels that we could be trading at for the next couple of hours, until we have some key drivers. Also, the Bank of England, the governor today, he was saying that the expectations or the vaccine development was also along with the expectations of the Bank of England economic outlook. So this is just in line with what the bank was expecting. So this didn't have much of an impact on the market. So watch out for any breakout of this consolidation zone. If we were able to trade above 32.30 again, this will add some momentum to an upside move towards 33 and maybe 33.15 retest the previous high, while any drop back below 31.60 could add to pressure to the pair, dropping towards 31, almost 131, 130.80 levels. So this area here. Okay, you can see that we're also finding support near the 100-hour exponential moving average. We're trading sideways near this, so also this could give more validity to today's low. Moving to the dollar against the Swiss franc, a bit of correction on today on the bigger move. We're trading sideways following the headlines move. So if we just have a Fibonacci retracement, we're almost trading near the 23.6. So between that area, between the top posted and the 38.2, could be the coming consolidation area that we're trading at. So I can just highlight this range and trade this range. It's almost an 80 pip range that we could be trading in, as long as we don't have key drivers for a directional move. The dollar against the Japanese yen, same move. Same formation to the dollar against the Swiss franc, though you can just combine the bottoms with the trend line. So watch out for any break below this trend line because it could trigger a sell-off towards 104.80 and then 104 key level 104.15. While any update, any rise back above 105.60, which was almost the top reached following the vaccine, could lead to further appreciation towards 106 area, 107 area. So this is for the dollar yen. So this is the 106, which is almost near the 100-day exponential moving average. So this is the formation that we're trading. Almost we're having an ascending triangle on the dollar yen on the hourly chart. Same high but higher lows. So watch out for the breakout out of this consolidation zone. Also, you can notice how the RSI is just dipping. So we had the RSI having a cloud following the headline, and then it started dropping a little, and then now we're waiting for a certain breakout. The Australian dollar is also stuck inside the consolidation range, so between 72.40 almost and 73.40. So it's a 100 pip range that we're trading at, awaiting some directional move in the market. So any break back below the support could trigger further downside towards 71.50, while a strong rally to the upside and success in breaking above this trend line, combining the previous tops, could lead to further appreciation towards almost 74.20, which was the previous top following the rally, the COVID-19 rally. So this is for the Australian dollar against the United States dollar. Moving to the New Zealand dollar, which is still consuming the headlines, following the RBNZ headlines, keeping policy unchanged. So this move happened on the RBNZ, and then now we're trading sideways inside the range. Found resistance near the area that we highlighted, the previous resistance area, which was almost near 69 levels. So I'm just going to remove these. And you can see here how we found a resistance exactly near the previous stops reached in late 2018, early 2019. So this area is critical for the coming market move. We had almost a reversal formation on the bigger picture, and now we are at a key area, at a pivotal area for a continuation towards previous zones that we were trading at 2016 2017 between 0.7 0.75, or we continue to trade inside the range between 65 and 70, this 500 pip area. Any break back below the previous stop of 67.90 could lead to further bearishness on the pair and a drop back towards almost 66.50. I'm just going to go to smaller time charts again. So this is the range that we're currently trading at. We could be still trading at this range for a while if we lack some key drivers. You can also combine the previous bottoms together, so you can just focus or notice any breakdown below this uptrend line. The dollar against the Canadian dollar following yesterday's sharp rise. So we highlighted yesterday the 31 level as a key level, is what is a support earlier, and turned out to be a resistance the past couple of hours and drove the market lower again. So we're talking about almost 40 pips from the top, 40-50 pips from the top, and also we were able to break back below the trend line that's combining the recent bottoms. So watch out for a continuation move to the downside as long as we're trading below this uptrend line. The coming levels to anticipate or to watch out for 29.86 and 120.30. So these are the key levels on the downside if the market continues to trade back below the upside trend line. However, any continuation for the previous move that was occurring, so a continuation for the bullish move that started on the 9th of November, this could lead to another retest to previous high of almost 31.80. So these are the key levels if you are trading the dollar against the Canadian dollar. I'm just going to add the moving averages again. You can see here how the 200-hour exponential moving average was key resistance. Now we're trading between the 100 and 200. The Bollinger Band is hinting for a small move, so we're seeing an impulsive move and then a corrective, impulsive, corrective. So it's not one-way directional move. We're just having corrections inside this straight move up. So this is for the dollar against the Canadian dollar. Gold is having a seesaw. It's moving almost inside the bigger range. So almost we have here 1850 and an upside range of almost 1890. So this is the bigger range that you should watch out for. And also you can just draw a trend line combining these previous tops and watch out for a possible resistance near 1876, which is the trend line that's combining the previous stop. So watch out for any break above this trend line. Could lead to a bigger rally towards 1890, while a failure here could lead to another retest below 1860, almost 1856, 1852. Silver, same range, but it's just more clearer a bit than gold. So we're stuck inside this rectangle almost between 24.45 and 23.50, 23.75. So it's a $1 range. We're trading at it. Watch out for any break out of this range. So a break above the 100 and 200 hour exponential moving average, which means the break above the previous resistance could lead to a bigger rally towards 25.20, while a break back below 23.75 could lead to a retest of almost 23.40 and even lower levels. So this is for silver. The Dow Jones, we're having a bit of a correction. So if we just have a closer look, yesterday we updated on, we were talking about this sideways move up, and then we highlighted this trend line where we were able to break below it, and it was a clear break and a move to the downside. So now almost we're having the same thing, but we were able, I'm just going to remove these so it's just clearer. So this is the trend line that we were focusing on yesterday, and the break with a good momentum or good volume of this trend line drove the markets lower towards previous support, almost 29,130. This support is holding currently. But also need to point out now is that we are having almost the same move. So it has similar to almost a channel here. So you can just combine the tops and the bottoms, and you have the formation that we were trading at. And now we're trading higher, but we're lacking good volume. So this could be a failing breakout. So what you just need to highlight in terms of levels, you can just go for the previous top, 29,670, 29,700. We're talking about this resistance level here, and this in terms of support, in terms of key levels to trade. And then if we were able to break back below 29,130, we could drive lower towards 28,850, which was the lowest reached following the vaccine headline. So these are the key levels for the Dow Jones. Meanwhile, the WTI or oil is just having a bigger correction of the move. So almost, if you just draw this channel here, we're almost trading almost at this channel here, and then the market is finding support. So if we just have a closer look, we can just highlight this as a consolidation area that we're trading at. So almost it's a $1 range that we're trading at. So watch out for any break. Any break to the upside could mean a continuation to the move and then a retest to almost 43.28, while a drop back below 41.20 could lead to a bigger correction back to our previous support of 39.63. These are the levels. Oil is just getting some momentum due to prospects of further extension to the current cut by top oil producer, by OPEC+. So this is just supporting the sentiment in the market. We're currently trading inside this trading range for the past couple of hours. Watch out for any break back above it. So now what we have to watch out for the rest of the day, the European Central Bank President Christine Lagarde, the Bank of England, also Governor Andrew Bailey, and the Federal Reserve Chairman Jerome Powell will be all speaking at the ECB forum about monetary policy. So when they talk about any changes, or when they hint to any changes in monetary policy due to the recent headlines, this could impact the market. However, if they just stick to their previous tone, or adopting the ultra loose monetary policy by these top three central banks, this could just be normal to the market. However, definitely you need to look out for any changes in their tone. So this is for the top central bankers. In terms of economic data, we're awaiting also the consumer price index and the initial jobless claims from the United States, which could also impact the market, in addition to crude oil inventories that could move the markets if we see another drop in inventories similar to the ones highlighted by the American Petroleum Institute on Tuesday. So this is all for today's session. I would just like to remind you that all the information, news, analysis, and opinions mentioned in this live session only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Thank you all for joining, and wish you safe trading.